Good morning, everyone. I'm very happy to see a full room in our audience today. We don't have a lot of time, so I'll keep my question short. I'm very pleased to be accompanied by Mubadala and Altera representatives today. They are two of the leading investors in sustainable finance in Abu Dhabi. Hanan, thank you for being here. We'll start with you first. What is responsible investing at Mubadala, and where does it sit in the investment strategy?
Mubadala's mandate is to deliver strong risk-adjusted returns for our shareholder and provide for current and future generations. Being a responsible investor is at the heart of that mandate. It's not a standalone strategy, it is a key enabler of that strategy. Being a responsible investor is not about ideologies, it's not about political positionings, it's not about trends in the market. It's about providing additional information for better decision making. We see responsible investing as an enabler for value creation and preservation. It provides us with access to capital, opens up new markets. It's about operational efficiencies. In short, it's really about if when you look at sustainability in a very pragmatic, business-focused lens, you get to the financial returns that you want, and therefore it's part and part of our strategy.
Thank you very much. Karim, over the past year, we have seen Altera shift from a funds of funds approach to a more co-investments, direct investment approach. Has the strategy really changed? What triggered this?
Sure. First of all, thank you for having me, and it's great to be here. As a matter of fact, our strategy did not change. Altera was built as a fund of fund with a co-investment model, and naturally, we started with the fund investment first to kind of, get the wheels starting, and we get more co-investments, right? And then we can kind of shift gears into deploying capital into these co-investments. And this is what basically happens from the announcement at the COP 28 when Altera was born. This is where we committed some capital to our main partners, which was Brookfield, TPG, and BlackRock. And then, like maybe 9 months in or so, when all of these funds were fully committed and they started to deploy, we started to co-invest. And on top of that, in order to accelerate the deployment and impact, we started doing co-investment with other partners. Because in our network, obviously, we have 100 plus, relationship we have across geographies and industries, and we leverage this to accelerate our co-investment program.
Thank you very much. Hanan, back to you. How does Mubadala integrate sustainability and climate considerations in the investment approach in a way to keep this balance of reducing emission and pollution, but also ensuring returns and ultimately creating long-term value?
As I mentioned, the way we look at sustainability is from a value lens. So when we talk about integrating sustainability considerations, we look at it with a view of driving performance and providing the financial performance that we're looking for. So if I give you two examples, one of them would be EGA, so Emirates Global Aluminum. Their Celestial, which is a product, aluminum product powered by solar energy, is really an example of how sustainability can open up new markets, premium customers, in a way that was not there before. Another more detailed example would be our partnership with Solutions Plus on a project Decarb. This was an initiative that we started in 2024 across 16 of our different portfolio companies to look at decarbonization efforts. And we were able to identify 160 energy efficiency measures that provided us with savings up to 18 million dirhams. And in phase two, we are projecting that we will be getting an additional 6.4 million dirhams of annual savings, and about eliminating about 100,000 tons of CO2, which really shows that decarbonization efforts, especially in built environment, is real, and it is driving real value for companies.
Thank you very much. Karim, back to you. Looking ahead, where does see Altera the most compelling pipeline for next 1 or 2 years? Do you explore sectors, geographies, investment themes? What looks exciting looking ahead?
So, as you know, Altera has quite a diverse mandate. So we have a global mandate across asset classes. That's in infrastructure, private equity, and credit. So we have pipeline across all of these asset classes and geographies. So it's quite different, where the deal flow in each country and so forth. But to give you an example, to see again how climate sits in the heart of all the current events, and the AI boom, for example. So all the increase in all these data centers, right? All of these are, a big part of these that need to come online very quickly are powered by renewables, right? So that's across all geographies. So that's obviously a big theme across the globe. And you have between that on the supply chain, right? So that's a lot of components, a lot of, between actual components, software, all of this. So our scope is quite wide because we invest between decarbonization, energy transition, sustainable living, and climate tech. So it's quite wide, and we have a very diverse pipeline, and very excited on what to come, especially in 2026.
Thank you so much. Hanan, you mentioned earlier 160 measures. I want to ask you a bit, what tools and metrics does Mubadala use to go through all the due diligence you need to go, accountability, performance? I understand there's a lot of work in the backstage to actually keep all these tools and metrics, to give you all the information in your decision making.
What's key here is to speak the business language. This is what I talked about earlier, and I want to re-emphasize that. What we have done is we've taken a data-driven, pragmatic, market benchmarked approach in developing our own tools that resonate with our audience, with our investment professionals, to ensure that we are providing them with the additional set of information that they need for better decision making. So we have 3 proprietary tools. Each of them targets a different asset class. It has a different sustainability targets. First one is our sustainable returns model, a tool that was developed to measure the performance of our direct investments across 19 sustainability factors. It provides with risks and opportunity associated with that particular investment. And that's a model that we use across the investment lifecycle, whether it's at the beginning, part of the due diligence, or during the hold period. And this provides our investment professionals, colleagues, with the information that they need to drive the operational efficiencies and risks of those investments. The other tool that we have is our general partners model, which is a model that we use for our PE and VC partners, and that purpose is to help them not only understand how they are performing, but also how can they integrate sustainability into their portfolio companies. And finally, we have our climate integration framework, which is a framework that we use to help our portfolio companies with their decarbonization targets and meeting their net zero commitments. And the key to all of these tools, as I said, is pragmatic, data-driven, and really looking at the sustainability from a value lens as opposed to any other ideologies.
Thank you very much. Karim, we were talking earlier in the speaker's lounge that money matters. Altera was created with a specific and different mandate to mobilize capital for sustainable investment for climate. Yeah. Please tell us more about the approach to mobilize capital at Altera.
Sure. So Altera has a dual mandate, right? We want to demonstrate that you can invest across climate strategies without compromising on return, right? So you need to make successful investments and you need to make money in order to achieve the impact,
Yes.
right? So that's number one. And by doing this, you can mobilize more capital into climate deals, right? So again, you got more institutional capital into that. And that's the approach where we anchor, climate funds. We seeded two funds in emerging market, which it's obviously challenging. So the way we did this to catalyze and to mobilize capital is that we provided that capital with a capped return on the level of the fund, and that to basically incentivize institutional investors to come in because we're providing them with that cushion that basically for that perceived risk in emerging market, right? And we're doing it with GPs that have the track record, in delivering returns and mobilizing capital. So we launched the Brookfield Catalytic Transition Fund, so that's up to $5 billion fund, and with the TPG, the Global South Initiative, that's around $2.5 billion fund. And they basically managed to attract new pots of capital as well, not just their own, existing LPs, new LPs coming into this, and we're very proud of, how things are so far going.
Thank you very much. We're being notified that this is coming to a closure in a few seconds, and I don't want to cut the next speakers. Thank you so much, Hanan. Thank you so much, Karim. Thank you all for your time today. I hope you found it interesting. Thank you so much.
Thank you.